Hey, welcome to this channel, and today we're going to talk about the 9 P's for mining investing. My name is Stefan, and in this channel we talk all about investing and how to improve as an investor. So if you are new to mining investing, or even if you have invested quite a long time, you need a reference point where to start, and also how to look at a company and how to evaluate the company and the company's the macro environments and the micro environments when it comes to mining, because there are quite a lot of effects that can or a lot of things that can affect the price and the mine itself. So this 9 P's were not made by me. I got it by one of my mentors called Doug Casey. And in places on the internet, I haven't seen this quite often. But as an investor in mining, more than 1 year now, I always needed a place to start. Now, eventually, you get to know all these things, and you don't need a, a strict guidance or a checkpoint like this, because you will do it quite often and it will become second nature to you. But when you start out, you need something to refer to, and where do you start? No, so what Doug Casey came up with is the 9 P's of basically investing, but mostly mining investing. And yeah, so let's look at them and then we keep going. So number one is people, property, politics, finance with the P, paper, push, price, promotion, and pitfall. Now you'll see that they are the top three are the most important, and after that they are from just whatever importance you will put to them. But definitely the number one is people, because Mark Twain, the famous writer, said that a mine is a hole in the ground with a liar standing in front of it. So they always want to promote their piece of ground with whatever is in the ground there as the best thing that ever happened to this planet Earth. So that's why people with high integrity, people that has a proven track record of success, started a mine, moved that mine to production, and then have been successfully producing for a while, and now starting a new project, that is highly likely that that person will succeed again than a new person. So it's not to say that a new person will not. However, it is crucial that the person running the operation knows what he's doing. Has he ever mined in that jurisdiction? And does he understand the type of mining that's happening there? If it's gold and he has previously mined copper, it's gonna be a tough decision for you to make when looking at the CEO and the management of that company. However, I have some mining experts here. Lucas Landin, Landin family, very successful when it comes to mining, and if they start a new project, you are more inclined to invest in him than anybody else because of his proven track record, and his whole family is in the business. So that helps following his sons into a next project. The next one is Ross Beatty has started a tremendous amount of silver mines, and then now lately he's invested in some gold mines that I have invested in. Now obviously these are not investing advice, but I have invested in Equinox. He also has Pan American Silver, but yeah, Equinox is one of my largest holdings, and I love Ross Beatty. But because he has a successful track record and he's known in the mining investing as one of the best out there. Another person that is full of knowledge is Mr. Rick Rule. Get a lot of knowledge from him, and he is an expert in the mining space itself. But gold, silver, uranium is his go-to, and also oil. But you can learn a lot from these three guys, and if you need more about people, you can follow them. The next one is property. Now it says it itself. Here you can see, let me just close this one. It says, where is it and how does it look? the property. You do not have to be a geologist to understand mining. However, throughout your mining career, you will find information that is helpful in analyzing the property. So knowing what type of grades come out the ground, and the drill results that I've put into the ground. You want to know some basic when it comes to that. And all of this leads back to the people. If the people have integrity, you don't have to do as much due diligence as what you would do with a brand new CEO that you've never heard of, that don't have a track record and integrity to live up by. So property is is the second most important there, because you also want to know, is it just a hole in the ground or does it have some ore there? So yes, you can also look at property as one of the most important areas. The next one, we look at politics. Now, if they say the jurisdiction is important, but I can tell you for sure, the stories that I've heard, obviously I haven't been through that before, but the stories that I've heard, that some of the tier one countries out there with the stable politics, they will just shut the mine down. So in some third world countries, they need these type of mines for their economy and to help the locals. So they don't really shut it down, but they will want more tax, they will want more benefits if you do run the mine there. So that's the only thing that can happen. Not the only thing, but that is most likely what will happen. And you see, here we have first world countries. If they are green and environmentalists, then the whole periodic table of the elements will be the enemy. So as you can see, what's happening around the world right now, they are shutting down mines cold, and you can't even mine further there. So be very aware of the political environment that the mine is working in. Then finance is just the amount of capital that is available in the balance sheet, and how much they can use for further development, for expanding the mine. Because if you think about a mine is a shrinking business, because they're taking the ore out of the ground and they're making the business smaller. They are not growing it. So what they want to do with the proceeds and the finance that comes from selling the ore, they want to take that and grow the mine. So they will want to further explore or acquire other mines that have done some exploration. So that is the only way that a mine can grow, and that's why it's known as a very crappy business. People don't want to, they don't want to play around with yellow trucks in the dirt and worry about the shrinking business. So it's a crappy business in Doug's Casey's words, but however, it is very rewarding in the long term, or short to long term, depending on what cycle it is. Obviously, mining is a very cyclical business. The number 5 is paper. This is how much shares are available on the market, and has the people diluted the shareholders consistently to generate cash and to explore further, and just for their own pockets. And again, this comes back to people. So you always want to make sure that the people running the business, they can turn a crappy average location. Good management can take an average location and they can turn it into something spectacular, where bad management can take a wonderful area and a wonderful property and they can turn it into a crappy mine. So again, management important. Paper, how much shares are outstanding, and do they have a lot of warrants out? Now, I won't go into detail with warrants, but that is just allowing somebody to buy the shares in a time period if they want to, if it reach a certain amount. So if you want to know more about warrants and shares, have a look at some videos, but make sure that the share count that the company has is low compared to um, how close they are to production, or just, I would say anywhere between, well, depending on the size of the company and the amount of ore that's in the ground, but anywhere between 150 to 300 million, nothing more than 300 million. Once it gets to 300 million, it's getting a lot, especially for mining companies. Small mining companies. Big mining companies is a different story, but we are talking now about entry level mining, junior and development stage. Push. The push is what's going to push the stock higher and when. What is the catalyst that can show on the road now as opposed to 10 years from now? So, are they going to add another mine very soon? Are they going to drill more holes and expand their footprint in the area? Are they is there something that nobody else probably understands? Like, do they have their own mill? I know a company also called Winston Gold, and Winston Gold has got their own mill 50 kilometers away, and they also don't have a resource, estimated resource, and that's why people don't invest in them right now. But these small catalysts that you want to focus on, that is that is what push means. What is going to happen in the short term that nobody else might know, because that's going to push the stock higher. The price of the share itself, the price of the company itself on the share on the market. Basically, the price is, if the price is too high relative to the amount of ore that they have in the ground, you are overpaying for it. If they have, let's say, for example, they have $100,000 or 100,000 ounces in the ground, and the gold price is a certain price, you can take the gold price, multiply it by 1,000 ounces, and you'll get a total. Now, and then you divide that by the shares that's outstanding, you will get the net asset value of the company itself. If the shares are trading over that, then of course you're overpaying, but there might be some other factors that's going to push up the price, or that's going to push up the net asset value of the company. But you want to wait either for a pullback before you buy in, or you take the risk of losing money. So make sure that you check the price on the stock market. Of course you will, but make sure that the price is low relative to the amount of ore that's in the ground at the moment, because nobody knows what the future holds. Number 8 is promotion. Now, they constantly have to promote the company, especially if you are a junior mine and a small mine, and you haven't produced quite a lot, or you're still on your way to production. You have constantly be out there, be going to conferences, making sure that people know about your company and what's happening. Constant news, basically. These companies are in constant need of money, so a higher stock price is critical to the dilution, to not diluting the existing shareholders. So obviously they will sell shares into the market to raise capital for further development, and maybe for just expanding their business. So if the stock price is high, they can sell more into the market and raise more capital. So that only happens if there are more buyers than sellers. So they need to constantly get people to their company. And if you have, again, goes back to people, number one, and that's why it's the most important, because those are the people that are out there, and the more people they know, the more integrity they have, the more people will, the more investors will look into them, and some institutional investors, and that's what you want, because they have the capital. So make sure that that the people are wonderful people with proven track records. And then the last one, and these are unknown facts but pitfalls. What can possibly I love this truck. What can possibly go wrong in the jurisdiction that they are? Pitfall takes in consideration all these other points where you look at each point and decide what is the risk to reward factor in each one of them. And if you get to all of them, if you get through all of them and you're okay with all the risk factors, and you get to pitfall and you go through all of them again, plus adding some additional black swans that can happen, then I guess you would can invest in this company, because there are so many things, and that's why gold mining is one of the most riskiest assets to have in your portfolio, but it is the most rewarding. And just depending on the type of person you are, that's what you will invest in. So yeah, by the way, anyways, let's just recap them again. People, property, politics, finance, paper push, price, promotion, and pitfall. So yeah, go ahead and put a comment if you find some value into this. Let me know what do you think about this. Let me know if we can add some more things to this, if you have thought of a different P. But I think this is the great way to start if you are getting into mining investing. And yeah, happy investing. And remember, we invest in cycles and we invest for the long run. So I'll see you in the next video. Have a good day. Bye bye.